we are live. Martin from the Philippines. We're here in Real Talk Lifeline. So coming here with a live, and the topic of the day is about how the rich measure wealth. So very quick background, and before we start, people watching the live or the replay, feel free to comment down below, interact, whether it's the live or the replay again. If you have knowledge on the topic, maybe your personal experience, it might be able to help me and other people as well. So I really appreciate that in the comments down below. So let's begin. What is this? How the rich measure their wealth. In the description, you might have seen hint. It's not when someone asks you, how much do you make? So normally, a lot of people typically, or most of the time would ask you that if they want to determine how rich you are. So before I begin, I'll just give a quick background, some quick notes here. Who am I? Who is Martin? Like, what's your credentials or background on this? So I'm a financial consultant. That's my work. So I began in 2014, November. So I'm about to go on 9 years already. This year, 2023. And then I also recently just took my annual compliance refresher course. So we do that every year after our rookie year. So I did it in 2015, 16, 17, 18, 19, 20, 21, 22, and this is my ninth already. Ninth time to take that annual compliance refresher course. So what is this? The background is on our agency standards, AMLA or anti-money laundering. If you're familiar with that, counter-terrorist financing, being customer-centric. So that's my background on the financial side of it. Of course, I'm also going to be sharing from personal experience. I also began seminars, you could say, self-development, and then one of them, so notably, is this. So I began taking seminars. This one was in 2018, The Millionaire Mind. And then I took more seminars after that. So I'll share more on that later on. But let's get to the topic of the day, right? Which is how the rich measure wealth. So my basis for this is actually coming from this book by T. Harv Eker, so Secrets of the Millionaire Mind. And the answer to this, so just let's get into it. How do the rich measure wealth? So here, if you can guess, you could really type down below. I'll write it down for you, brought the whiteboard out in green. So you could guess, how do the rich measure wealth? While I write it down, type it in the comments. The answer is, again, it's not how much you make. The answer is what they call net worth. So net worth. And there are 4 factors that we'll go through quickly in this live. So what is net worth? T. Harv Eker describes it very simply in his book. Net worth is the financial value of everything you own. Now, if you took up some basic accounting, net worth, you can also compute that by, they call it your assets, and then minus your liabilities. And then that equals your owner's equity, right? Or it's your net worth also. So what are the 4 factors, right? So net worth is the real measure of the wealth for the rich. Before I proceed to the factors, T. Harv Eker tells it very simply, a story here. When you go to a country club or a place where rich people gather, you're not going to hear them talk about how much do you make, how much do you earn, like that. It's usually how much is your net worth. So what is that? They're going to be talking about, again, the financial value of everything you own, usually in the form of not just their bank account. So again, like simpler people starting out, they'll start with that, like your savings account, etc., like that. The rich, they start talking about their investments. So again, that could be a mutual fund, a unit investment trust fund. So maybe you heard that term, trust fund. It could be real estate, again in the form of residential, commercial, business properties. Speaking of business, it could be that also. Private equity, meaning they own a percentage of a company, a corporation, a business like that. So add all of that up. Again, it's the financial value. This is not sentimental value, emotional value. If you have an asset or something like a car, a yacht, when I say a car, like a luxury car or a high value one, you have trading cards, anything rare artworks, those will constitute your net worth. Now, if you have your favorite, let's say, you have your favorite PlayStation 1 memory card and it has no financial value at all, it's just purely sentimental, that is not part of net worth, guys. So let's just keep it real here. So there are 4 net worth factors I'll quickly go through to make this practical and useful. So what's the first one? The first net worth factor to consider, how we compute it is, it's called this. Number 1, it is our income. So what is this? Income, usually we know this in the form of working income. This is where we usually begin if we're starting from scratch, from nothing, building ourselves up. Income can be a job. So let's say I started my first job in 2011. Then I was earning a starting salary of, let's say, 15,000 a month. That's like the entry level. So whatever that income is for you working, that's the first factor. It does not equal or equate to your net worth at once. So we'll go through the 4. Don't worry about that. T. Harv Eker also mentions another kind. There are 2 kinds of income. And the second one is called passive income. Now that's a little more advanced, and I'll mention that again later on. So the next factor of net worth, you can type down in the comments if you already know what this is, or if you have an idea. From income, we go to here. Next one is savings. So why is this important? Just again, I'm not just repeating stuff from the book that I learned. I'll also integrate it into my life to make it more practical. Savings, why? The formula for the poor, or some middle class even, is they stop at income. So that's it. They stop at step 1. What happens? Usually all of that goes away. It goes to expenses. Hey, there's something I want to buy, income, expense. If we don't have any income, we don't have any money in our bank account, in our wallet, then we can't buy anything, right? So no income, then nothing at all. Income, it usually goes out for the poor or the middle class. So thank you, buddy Roy. So I really appreciate your support. I'll quickly go through this one. This is going to be a much shorter live. So Royce also mentioned assets. So we'll be getting into that. So first, before we even get to assets, our income, next step is we have savings. Why? This will be used to purchase or acquire what Royce mentioned over there. So it's this term. Here we go. So related to what Royce mentioned, the third step is investments. So income first, then we allocate a portion. So quick note, again, this is just a very quick live. Savings, you can start with just 10%. There are books on that, like The Richest Man in Babylon. If you read the book here, The Millionaire Mind, Secrets of the Millionaire Mind. You take a course also, like the Millionaire Mind Intensive or others. The higher the savings you can get, the better, of course. You can start with as low as 10%. Some of you want to make it simple. Half, whatever you get, that's 50%. Put it into savings. From there, we have money to buy investments. So Royce again mentioned here a term, assets. Very similar term. An asset is anything that will put more money in your pocket. So I learned that from Robert Kiyosaki, just integrating the lessons. Simplified investments are, you could start with a bank, something very safe, solid, reputable. We're shying away from higher risk or scams, chances of losing your money. So savings account, time deposit. As a financial consultant, when I started in 2014, I started to learn more about VUL, like insurance investments. I learned about UITFs, unit investment trust funds, which I have both for those. I also heard of mutual funds. That's for different companies, right? Corporations offering that. And then don't be limited to that. A few years ago, Ayala launched the A-REIT, so it's the very first real estate investment trust here in the country, here in the Philippines. There are other investments you can get into. I also recently started Gcash, like learning how that works. So they have digital investments on that. If you got into Union Bank, CIMB, all these digital platforms that offer that, G Invest, etc. Last step, what's the last step? Number 4. So T. Harv Eker calls this the dark horse in his book, Secrets of the Millionaire Mind. If you can guess, type it in the comments. This is actually my favorite because I'll give a hint already. I'm more of a saver personality. So this has got to be one of my favorites in the equation of net worth factors. Simplify. So what is this? Some of you may not have expected this. People usually think more money, save more investments. Simplify is a little counterintuitive because it's the less is better here for simplify. So what does this mean? When we examine our expenses, so again, those who are like into basic accounting or finance like that, simplify means we lessen our overhead or expenses, simple word. And then we still have enough income over here. So the biggest key I learned from experience here is make sure that your income is as much or more to sustain than your expenses. So what are expenses? This is what it costs for you to live or exist in this world. So it can be basic expenses for food, your clothing, shelter, if you're staying in a place, rent, what all of those, electricity, water to take a shower, necessities like that. So those expenses, you have a number. For example, every month it costs you 10,000. For example, 10,000 pesos every month. Your income, let's say, is 15,000. Entry level, something like that. Make sure to also net it after taxes. So if you're like at minimum wage or a certain level, but you are getting taxed, please take into account. So if your take home is, let's say, 12,000, for example, income 12,000, expenses 10,000, you're still good. You're still net positive, in other words. Simplify just means if I can lower my expenses, and there are creative ways to do it. So dark side of a saver is to be like a hoarder, a miser, living in fear. The healthy way of simplifying is to find creative means. For example, if you had a car, the car isn't just for status, convenience like that. If you can simplify and just take, for example, the bus, because from here going, let's say, Alabang to Makati, if you take the Skyway, that's $164 one way, coming back 320. 8 plus gas plus parking in Makati, etc. like that. One fun way of simplifying is I learned to take the P2P bus. So that's 100 pesos all in. You don't have to pay for the Skyway, gas, stall, whatever, all that. So sorry, 110. So two-way back, that's like 220 bucks. Simplify. You can do that for food. You can do that for a lot of other things in your life when you factor in expenses. Why? It's to make it more sustainable. So, income, savings, investment, simplify. At the very end, you get your, over here, your net worth. Again, net worth is the financial value of everything you own, less any expenses, liabilities, debt, everything you own. And that's the total value of how the rich measure their wealth. So, yes. Sorry, AJ. I thought you mentioned basics. So, gun basics. For people who don't know, that's where I started teaching basics for gun safety, gun classes. Now we're going to money basics. But yeah, Real Talk Lifeline. We talk about anything here. Again, real, raw, authentic, unfiltered stuff. So, money is the topic of the day. How do the rich measure their wealth? 2 words. Here in green, net worth. So, if you want to go a little deeper here, just comment, deep dive down below here, watching the live or the replay. I'll be happy to even do a one-on-one sit down with you. I actually did this before, and I shared my personal net worth with that person, again in private, one-on-one. And that person, I hope it did help me a lot get the lesson better. It's very hard alone to just look at our money, our expenses. So thank you, AJ. And then thank you also, Faye, for watching, for supporting. It's very hard to talk about money. In my experience, going on 9 years as a financial consultant with clients. So what more just a friend or someone revealing their income, revealing their savings. Some people, I'll just share this because when I did my $1 million roundtable in 2016, 17, and 18, I discovered even though they're like the top 2%, there are some people, even in the higher levels, that don't know this. If you say that these are just basics also. Why? They had a lot of income. Maybe they earned like $1 million plus in a year. But what happened to their savings? Because they had nothing. Some of them were even in debt. So they didn't have investments. And they sure as hell didn't do this. Because if your expenses or your liabilities, debt, utang, is higher, then you didn't get to simplify, in other words. So to end this live, thank you for all the support. If you want to get more practical with this, I actually attended this seminar, Millionaire Mind Intensive, and it's happening again this weekend. So tomorrow, Saturday, Sunday, and Monday, that will be September 9, 10, and 11. So also, I took it to the next level. I attended it 2 times. Sorry, I'm going to read this comment. There's nothing to reveal. Starting from nothing is the most difficult, especially if it's your first time through. So I can't do it in this live because I just want to keep this short. But for AJ's comment, it is true. It's very hard when we start from nothing. I would say it's better than nothing. Or it can be fun, actually, learning this stuff. When we meet the middle class, or from poor middle class to high net worth, their problems get a little more sophisticated. So it's actually sometimes starting from nothing is simpler. Mas magaan in Tagalog. It's a little lighter actually. Because when you deal with the higher net worth, they're gonna deal with taxes, SEC corporation, pardon, but yeah, when I think about it, it's like a whole shitload of problems and crap I don't want to think about right now. So this stuff is actually the fun side of money. So I crewed. I did the seminar again in 2019. You can start with a general admission. Again, I'll be doing that this weekend. First time I took it in 2018, the seminar, The Money Mindset, which is the live version of his book, T. Harv Eker. I actually took VIP. So I did the VIP ticket for that. And if you want, you can always take it to higher levels, like if you want to learn more. So again, comment down below if you still want to learn more. Thank you, AJ. Thank you, Faye. Thank you, Royce, for the support in this live. So, quick recap. How do the rich measure their wealth? Towards net worth. How do we get to net worth? Four simple factors: income, then savings, then investments, and then simplify. So thank you. I love all of you. I will see you next time.